For my mini presentation, I have decided to feature Simply Wall Street. Simply Wall Street was founded in June of 2014. They operate in the fintech or financial technology space, and they're headquartered out of Sydney, Australia. The two founders are Al Bentley and Nick van der Burg. I wanted to give a little bit more information on the founders. First, Al Bentley is the current CEO. Al was originally trained as a naval architect and chartered engineer. Al has worked on ships, offshore rigs, and more traditional offices in Australia and England within the oil and gas industry. While on a stint offshore, Al, being a self-taught coder, designed the original prototype that became Simply Wall Street. Throwing caution to the wind, Al has pulled up roots and moved to Sydney to pursue his passion project. I was also able to network with Al for this presentation via email. He was very friendly and helpful. It was interesting to get more information on this new startup from the standpoint of its founder. He shared how he developed his idea as well as some early mock-ups for the platform. Nick van der Burg is the current COO, and after graduating with an economics degree, Nick started his career in the banking world, specializing in agribusiness and commercial lending. After a 12-month sabbatical, skiing and hiking through the US and Canada, he changed careers and moved into the sales and marketing space, where he developed a passion for growing businesses. Facilitating user engagement, partnerships, and general business operations are a particular interest of his. Now moving on to the overall concept for Simply Wall Street. Their goal, I have written here on the slide. Our goal is to empower investors to make profitable, non-emotional, long-term investment decisions with a unique visual approach. We are making it possible for beginners to confidently start investing. So as you'll see, I've added a few screenshots here. The one on the left just characterizes a basic page. So you'll see that they use gauges, and you'll see like the thermometer type thing at the top. Really what they do is they want to make this information as visual as possible. The top example, they're evaluating cash flows. So evaluating where the stock is priced compared to current cash flows versus where the stock should be priced off of future cash flows. So it's a really good indicator that maybe if the stock is priced at $20, but based off of future cash flows, it should be $30. It may be a good stock to buy into, as well as some different gauges. So things like PE ratios, return on assets, things like that will be contained in the gauges. And with that, they just show where the company is versus industry competitors. So it's a really good way to see how well this company is doing compared to its competitors. You'll also notice on the right, the thing that Simply Wall Street is known for is the snowflake. That's what they call this screenshot here on the right, which is basically this chart that has 5 different points: value, future, past, health, and income. This is really a snapshot of the company. You can see there are different checkboxes within each of those categories. However, it's a really quick way to evaluate a company. So for example, if I was looking at Amazon, I may see really high future and really high health. But other than that, the other factors may be really low. Looking at a company like Microsoft, I may see really high past, really high health, really high income, and maybe lower value in future. So again, it's a really good way to, at a glimpse, really get a feel for, is this a company that I want to investigate further? The company does a really good job very clearly outlining the financial data. A lot of this data can be a little bit overwhelming, especially if you're not a trained professional in this field. However, the way they portray it is so straightforward. It's the easiest that I've seen in the industry. Another thing that was also really helpful that I wasn't aware was public information before Simply Wall Street is to look at what the insiders at the company are doing in terms of buying and selling shares. So I can look at maybe what the high ranking people at the company are doing, whether they're buying, selling. And again, that can give me an indication if I'm on the fence about buying a stock, if I can see that a lot of trades are taking place recently from the CEO and the COO, maybe that puts me over the edge and I go through and buy this stock. The target market for Simply Wall Street is do-it-yourself investors, and they've subcategorized this into two specific categories. So keen but confused. Middle-class adults not investing, but what if they knew more? And then the second, active with no idea. Existing confused investors who are looking to make trades in the next year. In their active market, it's about 80 million. However, worldwide, they see a market potential of 380 million. The cool thing about this website is, although it's based out of Australia, their primary target markets currently are the US, the UK, and Australia. So all of those stock markets are covered. Pretty much any US stock that you would want to see is covered in this website. So it's really not an issue at all that this company actually resides in Australia. I was really surprised to find that after I had been a beta user on the platform, that the company is actually based out of the US. Some of the competitors are housed in either a subscription-based model or a free tool. Some of the subscription competitors are Morningstar, Scaffold, and Motley Fool. Some of the free tools are Stockflare and companies similar to Yahoo Finance. Of course, there are more of those, MSN Finance, that type of thing. But when I was corresponding with Al, he mentioned that Scaffold and Stockflare are what he considers to be their two primary competitors. Although doing some research in the industry, it seems like Morningstar has perhaps the strongest hold on the industry. And then Scaffold and Stockflare, those are more up-and-coming companies, kind of in a similar space as, or a similar situation that Simply Wall Street is in. And then there are the traditional financial advisors. For the past several decades, investing has been something that's been overcomplicated and is something that many people don't feel comfortable approaching. So financial advisors have done really well because people turn their money over to financial advisors and trust them to make all of their trades. However, if Simply Wall Street can simplify things to the point that it will empower the average everyday investor, then that may eliminate some more financial advisors because more individuals are able to utilize technology to accomplish their investing needs. For their funding history, they had their first round of seed funding in June of 2014. They raised $100K from AWI Ventures. The second round came in August of 2015 when they raised $600K in another seed round from Artesian Capital Management. In terms of predictions for success, I first want to start out with the cons. It's going to be very tough. There are some very well-established players in the game, like I mentioned, Motley Fool, Morningstar, and there are more from there. This is the most highly compensated industry, most likely in the world, and so there's not a shortage for competitors in this space. However, there are also some pros here. A lot of those competitors have been in the space so long that they're not properly utilizing technology. They're not applying and changing to meet the needs of millennials. However, Simply Wall Street is really built for people that like to see things visually, which millennials are really wired that way. So it's a very new concept that I don't feel like another company is really matching them, at least a company that I have seen. It's very easy to understand. I'm confident that you could throw almost anyone into the platform, and within 5 to 10 minutes, not only would an average investor or an average person have a good feel for how Simply Wall Street works, but they could also identify a stock that they would like to buy nearly immediately. I know that using the platform, I've been made aware of several stocks that I hadn't even heard of before that have turned out to be really good investments. So in conclusion, I would invest in the company. I feel like it's going to be a very tough road, but the founders seem very committed. Al seems very passionate about what he's doing, and I think the future is bright for Simply Wall Street.